Our Finance Minister Tito is in the firing line again. Last night he took a break from tweeting recipes to condemn the decision by the Zambian government at Galungu to remove that country's central bank governor, Denny Kalyalya. In his tweets overnight, Mboweni said African leaders could not just wake up in the morning and fire their central bank governors, and that he would mobilize if governors were not protected. President Cyril Ramaphosa today issuing a statement saying he was rebuking him for that comment. Well, our economics contributor Ayabonga Cawe joins us. Now, Ayabonga, good afternoon to you. You're going to have to start me at the beginning here, I'm afraid. For many years around the world, central banks weren't as independent as they are now. Interest rate decisions could be political decisions. Why have so many countries over the last 30 years or so given their central banks some independence?
Well, some of that, Stephen, has to do with, I guess, the rise of monetarist thinking. You might be familiar with the ideas of a gentleman called Milton Friedman, who was one of the foremost monetarists and part of what was called the Chicago School of Thought. And a big part of many of the transitional societies in the third world, at least of all, around, I guess, the 70s, after the OPEC oil crisis, and even for us here in South Africa during the transition, having an independent central bank was seen as a critical part of the kind of economic fundamentals that a country had to have in place. And we sort of with our own constitution. And maybe I think a big part of it was largely driven by the experiences of Latin American countries who had to deal with runaway inflation and the implications of that for many of those economies. Now, our constitution here in South Africa, in section 234, does give some notional independence to the South African Reserve Bank in its undertaking of its own functions. And it says that they must perform these functions independently without fear and favor or prejudice. But as you know, Stephen, all kind of power exercise or independence has to be checked and balanced in some form or shape. And in this particular case, one would say that the SARB might be independent insofar as its functions and financially raising its own money and doing all of that. But also, I think there is some instrumental independence. So how it uses the instruments at its disposal to achieve the objectives of price stability and balanced growth are something that it has some considerable independence in undertaking. But there is an expectation that they should consult. There's an expectation that the governor of the central bank should have regular discussions with the Minister of Finance and also with the parliamentary portfolio and select committees on finance. So there is a considerable amount of independence, but some of that is also checked by the executive and the legislative arms of government.
Okay, so when a president makes a decision, and I suppose firing a Reserve Bank governor must in a way be an exercise in political power by a president, so we could probably accept it's a political decision. What impact does that have? I mean, does that affect anyone with savings or affect ordinary people in some way?
So we've been talking about South Africa for a second here, Stephen, and I guess the context of our discussion is the Zambian case where Edgar Lungu fired the central bank governor there, and I think in that particular case, Mr. Kalyalya served at the mercy of the president, and I guess the president was empowered to make that decision. But I think what the finance minister was raising was some of the spillover effects and implications of doing this. We know financial markets are driven largely by sentiment, herd instinct, and what we often refer to as confidence. And, the financial markets really saw Mr. Kalyalya here a big pair of hands. He was educated in the U.S., he stood at the IMF. He's seen as somebody who, the Paris Club of creditors can talk to, and we know Zambia went before the Paris Club, a few months ago, trying to suspend their interest and principal payments on their debt. And so, in a sense, this decision is made by the Zambian government or the Zambian president at a moment where the Zambian economy is suffering. It's a very commodity-reliant economy, high levels of inflation, high levels of debt, and it's certainly really finding itself in a corner here. And many people are saying that, this comes at a time where the central bank has had to finance a lot more of the fiscal space that the Zambian government has had during this difficult moment. And that's why Mr. Kalyalya had to be replaced because, Edgar Lungu felt that he wasn't the kind of pliable person who would agree. But I think in many ways, Stephen, this is a conversation between financial interests and political and executive authority. And in instances where financial interests are wanting low debt, wanting low budget deficits, low inflation to protect asset values, and where the political or executive authority might have a different view and economic perspective on what is needed. And I think at this point in time, the Zambian authorities might have had a different view on the kind of monetary approach that's needed to achieve some of their macroeconomic objectives.
Okay, so Ayabonga, I mean, Tito Mboweni is tweeting as the finance minister of South Africa, but we all know, and I sometimes think that you see this, his primary identity is actually as a former Reserve Bank governor here. So in a way, I think perhaps his heart is with Reserve Bank governors everywhere. Was President Ramaphosa right to rebuke him in the way that he did? And obviously there are sort of international relations implications to this.
I think it was correct on two fundamental scores. The first one is that Zambia is a sovereign nation. And the Zambian people, having elected Edgar Lungu, have empowered him with certain authority to make certain decisions. Now, it's not the prerogative of anybody, be it in the financial markets or a former central banker anyway, to say that that decision is wrong and Edgar Lungu must explain that decision and somebody will mobilize and hell have no fury if he doesn't explain on what basis he made that decision. That's certainly not Tito Mboweni, no Ayabonga Cawe's position to even, or space to even make that kind of call. But I think the second dimension is that South Africa currently chairs the African Union. And it's certainly not the kind of tone you would want to set with all that has surrounded South Africa, acting like a big brother, being seen as a sub-imperial power on the continent. You certainly don't want a situation where you are intervening in the domestic matters of a sovereign nation like Zambia in the fashion that Tito Mboweni's tweets here seem to suggest. I mean, you'd remember that one of the critical parts of the rap sheet that faced the African National Congress Youth League at the time of the expulsion of Julius Malema, Floyd Shivambu, and others was the issue around what was happening in Botswana and seeming meddling into the affairs of the sovereign nation of Botswana. So this does have some kind of precedent, this kind of reprimand. But I think the other dimension is that, as you said earlier, and I think you're spot on, Stephen, that in many ways, the finance minister still sees himself as, the eighth governor of the South African central bank. The central bank has had 10 of these governors since 1931, and we know central bankers are a very clubby bunch. I guess, from a sort of political ideological perspective, a lot has been made about ensuring the independence of the central bank. And I think we've already started to see now that what happens in the marketplace is that those with access to or who marshal a lot of capital are able to discipline some of those who exercise executive authority in the manner that has been exercised here. We saw the Zambian kwacha down today, and certainly a lot of jitters in the bond markets as well. Zambia's Euro bonds also seeing the yield spike there. So it certainly is a very interesting political economy mix here with the geopolitical dimension, Stephen, and I think President Cyril Ramaphosa was correct, both as the president of the nation and also with South Africa as the chair of the AU, to reprimand and to say, look, this is not the position of the South African government, because the South African government is not in the habit of meddling in the affairs of sovereign nations elsewhere.
Ayabonga Cawe, I suppose the advice really is that if it's not your kitchen, don't interfere with the chef. Thanks very much indeed. Ayabonga, of course, as you know, is an economics contributor here on Newzroom Afrika.